Hello traders, Day Trader Matt here of businesswithtrading.com, doing a trading strategy recap for the 12th of March. And today was a fairly exciting day. Um, it was interesting in the trading room because we missed more trades than we entered. It was exactly like that. We missed more trades than we entered. We ended up 1 for 1 and ended up dropping 2 3/4 points in the market. It was really 2 3/4 points is a drop in the bucket. It's not a bad loss. It is our second loss of the week as far as the trading days. But it's not that bad. It's definitely manageable. We're up over 20 points right now. It sucks to have a losing day, especially as two losing days in a week, but it happens. And it's something good to talk about. Because some there are some new traders out there that think that professional traders never lose money, or that they're never wrong. They're always correct on their market analysis. Like, I think the market's going this way, that's how I'm going to trade. Professional traders always have multiple analyses up because they know it can go one way or the other. They're diligent about the way they look at the markets. I've seen, traders on, different forums. People have even emailed me. Look, I, knew this stock was going this way. I got into it and it went this way. And you're like, okay, that's great. But how many times have you thought that and it's gone the opposite way? Probably more times than that. And you've probably lost more money than that since I've never met you before and you're saying this. So, being a professional trader means that you can make money consistently. It means that trading can be your only source of income, and you're going to be okay. You're going to be good. That's what being a professional trader means. It doesn't mean that you have to work for a bank, or you have to work on Wall Street, or you even have to live in New York or London, or any of the financial capitals. You being a professional trader only means that you can be consistent in the markets. So it doesn't mean you have to wear a suit. It doesn't mean you have to, drive to work every day. You can work out of your house. And a lot of retail professional traders do. I say retail because you're not actually working for a big bank or brokerage office or something like that. I consider that institutional. And even though there are some pretty large retail traders, and some of them have teams behind them, I still consider them retail traders. And those two terms, one is not necessarily better than the other. It's just terminology. A lot of people take terminology too far, but anyway, before I get off on too much of a tangent, let's talk about what we actually did today. So, our first trade was, we kind of watched price move up. I tried to get long somewhere in here. I don't remember exactly. But we were unable to. Market kept going. And as it came back, we got long over here. We were able to take profits out. Came back down. We did not get filled. We were looking for a little bit lower. Didn't get filled. Price came up. Chopped around a little bit. We did not get filled on this move down either, and price came up. We did not get filled. We tried to get long somewhere in here. Didn't get filled. Market came up. Then it came down. It finally let us in, and then took us out over here. So that was our loss. This was our win. Very small win. And it is what it is. Like I was saying, the market might move really well and you might do really badly. And usually that's the case. You're not able to get in trades. You're not able to get filled. And I'm okay with that. Because the majority of the time, I'm able to get filled and I'm going to make money. So, I'm okay with today. some people will look at today and, oh shit, man, how did that happen? Blah, 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 all kinds of negativity. You can't focus on that shit because it's really detrimental to your trading. But, you look at the day and you're like, okay, the way I would look at it, okay, I didn't get filled a lot, but it doesn't matter. It really doesn't mean anything. We're down 2.75 points. Is that manageable? Is that going to kill my account? Is that going to, take my whole month away? No, it's not. It's totally manageable. 2.75 points is nothing. Last week we did really, really well. This week it's kind of been, maintained pretty much. The past few days have basically just been maintenance. And that's usually how your trading is going to go. Not every day is going to be a blowout day. Some days are going to be good. Some days are going to be mediocre. You're going to have a couple bad days, but that's the way you want it to be. And professional traders go through this all the time. Yeah, you see on television the big trades. The trades where I made 50,000, 150,000, couple $1 billion in the financial crisis. You saw some trades set up. But professional traders know that every day is going to be a grind. Every day is going to be different. And some days you're going to make money, some days you're not going to make money. So anyway, hopefully you got something out of my rant there. I thought it was a pretty good one. But I wanted to talk about a trade that we got into and talked about on the strategy recap, and that is the Russell. We got into the March contract, and so close to roll over, some people probably wouldn't do it. The Russell isn't really the most liquid, so I don't like to get into a position that I can't manage properly. So anyway, we got into the March contract right here. Kept a 10-point stop. We talked about it in the strategy recap. We took partial here, got out of the rest up here. That's over a 2-to-1 reward to risk ratio. And that's really nice. That is going to really make our month. Not necessarily make our month, but it's really going to add a lot to our month. Now, besides being long Russell futures, we were also long the IWM calls, and we talked about that in the strategy recap as well. We were long the IWM pretty much. I think we got in. Give me just a moment. I'll try to pull up some stats. Okay, guys, we got long the IWM over here on the 9th, as probably over here. I think we only took like maybe 30 cents of heat, probably less than that, and then it rocketed up, and we ended up getting out right in here. Price came down, it started its way back up, and we got out somewhere up in here. We made a little over 40% on our trade from the 9th, which was actually, over here, the 9th, until today, which was the 12th. So that's not really a very, very that bad of a trade at all. And that's really what I look for. I felt very strongly, the Russell was going to be able to have a nice pop today. It was holding up very well against the ES. And I don't really look at like correlations at all. I'm not a correlation guy. But anybody watching the market could see this. The Russell's holding up, the S&P futures are making lows. Anybody watching the market could see that. So if you had your choice, would you rather be long the ES or the TF, the IWM or the spiders? It doesn't take a genius to figure out, let's get long the Russell and see what happens. And there's a very good chance of a pop. Even statistically, looking at looking at stats. We were looking at the move that happened yesterday on the ES and the typically what happens after that move, what happens after the move that happened yesterday and the day before that. Statistically, a pop was in the cards. That's not what I look at either. But we did have statistics on our side if you wanted to look at that. I just look at the overall picture and say, okay, the Russell looks great, I want to get in. And we did. We made 40% on our money in, the ninth 3 days. And then we were able to get a very nice pop in the Russell futures. And that's what trading's all about. You pick your spots, make your trades, and you go home and you have what you have. And that's exactly what we did. That's what we do every day in the E-mini trading room. That's what we do every day in this future swing trade group and the option service. And it's a lot of fun for me. Some days are a lot more of a grind than other days, but I wouldn't trade it for the world. It gives me a lot of fun. So anyway, hopefully you got something out of what I talked about today, made some sense to you. You can always put comments below the video. Any questions, comment, feedback, it's all welcome. It's all encouraged. If you have a question, ask it. Whether it's in the comment section, you can email me, support@abusinesswithtrading.com. A lot of people like to do that. I don't really know the reasoning, but either way is cool. That's why I have email, and then we have a comment section. I have a phone too, because certain people, they like to communicate certain ways. And that's cool. It doesn't really matter to me. If you have the question, ask it. That's what really matters. Because I was once a new trader, and I once knew, basically nothing. I had to learn everything, and there was nobody to ask questions to. So I kind of had to learn as I go, trial and error, what works, what doesn't work. Okay, great, let's make it happen. That's where I was coming from. Luckily I was coming from a detailed background and, background in brain research, neuroscience. I was able to put together the puzzle and kind of make it work, and then, just develop a strategy over time that, really works well. So anyway, feel free to leave comments, and I will see you back here in the markets. Thank you.